Hello, in this video we'll continue on and talk about double declining method. Double declining means the depreciation is twice the straight line method. Now in double declining, you're going to notice we will take more depreciation expense in the first years and less in subsequent years, which makes sense. For example, if you buy a car, you probably know it depreciates or goes down in value more the first year than it does in subsequent years. So double declining is a popular method. Now the formula for every year except for the last year is cost minus accumulated depreciation, not the residual value, but accumulated depreciation. And we talked about in the last video that accumulated depreciation is all depreciation expense taken to date, times the double declining rate. Now the first thing we have to do is calculate the double declining rate. And I think the easiest way to get the double declining rate is to take 1 and divide it by your life in years. And again, we're going back to our original information. The cost is $320 and the life in years is 4. So if I take 1 divided by 4, that actually gives me 0.25. But it's double declining, so I have to double it. So that gives me 0.5 or 50% as my double declining rate. For example, I'll do to the side, if it was a 5-year life, you would take 1 divided by 5 years. That would give you 0.2. Double it, and that will give you 40%. So that's all you have to do to get the double declining rate. Okay, now this is a 4-year life, so I will use that double declining rate for years 1, 2, and 3. But the last year, year 4, that we'll get to in a moment, you do not take it times the rate. Instead, we're going to take out the salvage. But let's concentrate on years 1, 2, and 3. So year 1, the cost is $320. At this point, no depreciation expense has been taken. So accumulated depreciation for year 1 will always be 0. So take $320 minus 0 times 50%. Your depreciation expense for year 1 is $160,000. Now for year 2, again, your cost is $320,000 minus accumulated depreciation. Well, you've only taken $160,000 from year 1 of depreciation expense so far. So 320 minus 160 gives me 160, but take it times the double declining rate of 50%, and that gives me $80,000 for depreciation expense for year 2. Now I want to note over here to the side that accumulated depreciation at this point, if you add the 160 plus the 80, that accumulated depreciation at this point is $240. So when we do year 3, it's going to be $320,000, and you're going to subtract accumulated depreciation of $240. Now I went ahead and did it separately. I took $320 minus year 1's depreciation expense of $160 minus year 2's depreciation expense of $80. But basically what I'm doing is taking $320 minus $240 times 50% gives me $40,000 for depreciation expense for year 3. Now we're up to year 4 and the very last year. So the formula will still be cost minus accumulated depreciation, but instead of taking it times that 50%, the double declining rate, I will subtract salvage, which remember was $35,000. So I'll take $320 minus year 1's depreciation expense of $160 minus year 2's depreciation expense of $40 minus year 3's depreciation expense of $40. Oops, I'm sorry, I think I said $40. So minus $80,000 for year 2 minus $40,000 for year 1. Then I subtract $35,000 for the salvage. I do not take it times the double declining rate, and that gives me $50,000 or $5,000. Thank you very much for watching the video, and I hope that helps you out with calculating depreciation.